I'm Will Beecham, ICE's Chemical Business Deputy Editor, and I'm here with International Echem Chairman Paul Hodges. Hello, Paul.
Hello, Will.
Paul's in Lisbon for the EPL meeting, which takes place this week. And so it seems like a good time to talk about Europe and Europe's petchem sector. I wanted to start off by asking you what you see as the biggest challenges facing the sector. What springs to my mind, largest in my mind, is the looming downturn and recession. Can you make any comments on that?
Yes, I mean, I think the if you go back and look at the data that comes out of the American Chemistry Council on capacity utilization, that is the best leading indicator for the global economy, with over 50% correlation with the IMF growth GDP data, and that's been signalling a downturn since December 2017. And I have to admit, I was disappointed. We've now got the up to April data, and I really had thought we might see a bit of an upward movement in the first quarter, for the simple reason that there were virtually no holidays. The Chinese New Year, but that always happens. Easter is late, everything else. The weather was reasonably good. It wasn't freezing on the ground, so construction should have been able to get off reasonably well. The oil price was moving up, so normally companies down the value chain would be buying forward in order to protect themselves against price increases, and actually nothing happened. And so that's really quite worrying. The only people who stockpiled, of course, was the UK, ahead of the expected Brexit date on the 31st of March, which didn't in the end happen. So now we're seeing unwinding of that stockpiling. But if you look around, if you look more deeply, look at benzene spreads at naphtha, for example, you see that those peaks have disappeared, and we're back in that sort of old range of $80 to $200 a ton. If you look at caustic soda stocks, which I used to run the caustic chloralkali business, those stocks have been moving up, and so everything on a day-to-day basis is saying to you, actually, I think we've got a problem here.
Well, I noticed that in Asia, the chemical markets seem to be in quite a mess. You've got falling prices, margins going down a lot too, but that hasn't really happened to Europe yet. Do you think that's around the corner?
I think the key problem with Asia is around the end of China's stimulus and the debt. The government is clearly seriously trying to tackle the over leverage that they've got, and excuse me, they have a particular problem with local government financing, which has caused the debt sort of to spiral out of control. This is provinces keep bailing out companies in order to keep employment and sort of secreting it in financing vehicles which aren't exactly on balance sheet and so on. So that is a big area. Plus, of course, I mean, the big story that we've had for a while of the trade war. And trade wars are no good for anybody, but they're certainly not any good for China. So that's understandable. China's such an important influence in Asia. You can understand that is going through some problems.
And how about Europe? Is the trade war having an impact, an indirect impact on Europe, would you say? Chemical.
Well, it's obviously having an impact on countries like Germany, where a lot of German cars went out to China, and if the Chinese auto market is now down 15%, which is what it is, then obviously the number of German cars being sold goes down, and the auto industry itself globally is coming into, I fear, a kind of perfect storm, where purchases are being kept up by debt, and the consumer has really got to the point now where they just can't manage any more debt, and so the auto industry itself is in a downturn. And the question is, how big a downturn? Well, there's a lot of debt around. The used car market is now very much more attractive, and for young people, given the costs and everything of a new car, the new car market is out of reach for many. So the used car market is going to be much more popular. So that's going to cannibalize new car sales. And then, of course, you've got the vast sums that companies are going to have to spend on the transition to electric vehicles. and this has been coming along for a while now, but they are there. And then, of course, topic we've been talking about for 3 or 4 years, Dieselgate. Consumers in Europe, this is a specific European problem, consumers have just lost confidence and lost trust with the car because they were lied to. But they were told these were the emission levels and they weren't. So put all that together and you've got the new CO2 limits coming in next year, and now they can't be met because people have aren't buying diesel cars. We've gone back to buying gasoline cars, which emit more CO2 and so on. So the more you go on, the more problems there is there. And so I think we're going to see, start of the second half of the year into 2020 and so on. I think we're going to see quite a big falling away in new car sales. We haven't got there yet. China is ahead of us on that. I hope I'm wrong, but I think that's what's going to happen.
And what does that mean for the chemical sector? It's such an important end use for automotive, such an important end use for chemicals. Electric vehicle sales are still growing, but it's from a very small base. Can the industry rely on switching over to supplying parts and products for the electric vehicle sector, or other kind of sustainability angles that the industry can explore to keep growing?
I do think that we are at what you might call a paradigm moment with the industry. That my career, your career, most people's career has been built on globalization, and globalization has been good for us. The global population was 2.5 billion in 1950. It's 7.8 billion today. That's growth. No matter how incompetent the central banks were, they couldn't have got in the way of that kind of growth. You go from 2.5 billion to 7.8. That's an awful lot of demand. But if you now look at where we are today, we have aging populations because people are living 15 or 20 years longer, and at the same time, fertility rates have been below replacement level for 45 years in the main Western countries. And you're actually now starting to see, if you look across the OECD and China and the main countries, you're actually seeing a fall now in the number of working age adults, which we've never seen before. So what are we doing? We don't need globalization anymore. What we actually need is to make more use of what we've got, do more with less, which is sustainability. And so, if you were going to rerun The Graduate and remake that, what would Mr. Maguire be saying to Dustin Hoffman? Would it be one word, plastics, young man, go into plastics? No, it wouldn't. It would be one word, 2 words, go into recycled plastics. So all of this, and we're going to become, therefore, a much more service-orientated business, which is great news, actually, for people with sort of education and skills, which is the people who work in the industry, because we're going to have to create more products, and they're going to be more dependent on intellectual property rather than just on chemical molecules and so on. So there's lots of challenges out there. Demand for mobility isn't going to go away just because we move to electric vehicles or autonomous vehicles or whatever. Similarly, water and food and shelter, all of these important areas are going to still require products, but they're going to be more of a bounded by services. And so, if you're starting out today, sustainability is going to be a great change. But of course, any change has winners and losers. And that, I fear, is going to be the issue, that some people will jump on the sustainability avenue, do very well. Some people will say, no, we're going to go back in the end and won't do anything, and they'll be the losers. So it's going to be quite a tricky period, I think. But I am very optimistic about the outlook for the people who grasp the opportunity.
Well, it sounds like you've got plenty of topics for discussion for the EPL meeting. Thank you very much, Paul, for your time today.
Thank you, Will.